Hi, and thanks for stopping by. I'm Larry Weinstein, and I'm both a CPA and the founder of SolveMyTaxProblems.com, based in Houston, Texas. And today, I wanted to answer the question, what is financial hardship? Financial hardship is actually a technical term that's used by the IRS. And what financial hardship really means is that for the IRS to pursue any collection activity against you, you're in a financial situation where you don't have that much money or assets. It would be considered a financial hardship on your family for them to do enforced collection activities. Enforced collection activities being something like a wage levy or a bank levy. Now, a financial hardship as defined is where the IRS takes a look at what is your monthly sources of support, your income. It could be from wages, it could be from self-employment, it could be from interest, dividends, rents. Those are your sources of income. And from that, they compare that to what are your actual living expenses. And they have it broken down into categories, such as food, clothing, and miscellaneous. That's a category. There could be housing and utilities. That's a category. It could be ownership cost of the vehicle. In other words, if you're buying a vehicle, how much does it cost? It could be operating costs of the vehicle. How much does it cost to maintain and operate that vehicle, including gases and stuff like that? It could also be the taxes that you pay. It could be the health insurance that you pay. It could be out-of-pocket health expenses. There's a whole bunch of things that go into it on the expense side. Just note that there are what are called maximum allowable expenses. And the maximum allowables typically come in for food, clothing, and miscellaneous. That's a category. Housing and utilities, that's a category based upon the county that you live in and the number of people in your family. The other category is ownership cost of the vehicle. That's got maximum allowables, as does the operating cost of the vehicle. Health insurance and the taxes that you pay typically are allowed at actual amounts. So the IRS takes into account what is your monthly income versus what is your maximum allowable expenses. If your monthly income and your monthly allowable expenses are the same, then you have no ability to pay the IRS. And for them to put a wage levy on you or put a bank levy on you would actually cause your family a financial hardship, because you can barely pay your bills the way that it is. And for the IRS to take money away from you, you would not be able to pay your bills. So a lot of people think the IRS is a mean, ugly bureaucracy, but in actuality, when you look at this situation, there is some equity there. If your family is living, barely getting by, and you hardly can make ends meet, the IRS will look at that situation. If you explain it to them, they will look and determine that that's a financial hardship. They will probably release any levies at that time. They'll probably work with you to get yourself at the current time set up as what is known as currently not collectible. Therefore, they won't do any other financial or enforced collection activities. That's it for today, where I answered the question, what is financial hardship? If you'd like to get a copy of my free book, The 10 Common Mistakes Taxpayers Make When Beginning to Solve Their IRS Tax Problem, go to the link here on the left side of the screen and enter your information, and I'll send your book right out to you. Thanks for stopping by. Hope to hear from you soon. Thanks.